I'm Teresa Matic with Resource Investing News. Here with me today at PDAC is William Tankard, Director of Precious Metals and Mining at Thomson Reuters. William, thank you for joining me.
Pleasure.
So in your presentation at PDAC this year, you made an interesting point that jewelry demand maybe isn't as important for platinum as some people may think. Why is that?
I think it is a significant aspect of demand. It comes in at a shade over 2 million ounces out of a market in the order of 7 million ounces. The key aspect of it is that it's not really a price driver, but it's a price taker. So if the economic conditions are favorable and if the pricing is advantageous, then jewelry can come in and take up the slack. But it's not going to be driving prices aggressively upwards in the event of soft market conditions elsewhere.
Okay, and how do you see above ground stockpiles affecting the markets for PGMs this year?
Well, in the case of platinum, we see stocks having started 2014 at or around 5 million ounces. During 2014, there was a major incident in terms of a strike across the Western Bushveld in South Africa, where around 60% of South African mining supply was taken offline for 5 months. This led to a shortfall in the market to the tune of probably almost 1 million ounces. So this has obviously drawn down stocks, but now we see production beginning to recover after the strike, and this is likely to mean that the stockpile is now not drawn down materially more than has been the case so far. So down from 5 million ounces towards 4 million ounces, but then going forwards, we see it being, give or take, a balanced market over the next couple of years for platinum. For palladium, you are starting the year 2014 with a higher stock level, probably at or around 8 to 9 million ounces, but the market deficits are that much deeper than is the case for platinum. So you're going to see overall the stock levels between the two metals drawn down towards a similar point in time in the future, and with that we think that prices should continue to converge as they have been doing over the course of the last 4 or so years in the next 2 to 3 years.
Okay, and you talked about the strike in South Africa hurting supply. Do you see that rebounding in 2015?
Yeah, well, I think it's almost going to return to a level of neutral buoyancy. So you had these exceptional events in 2014, 60% of the industry offline for 5 months, and so that now that the producers are beginning to reach normal production levels again, that should return. So South African supply came in at, give or take, 3 million ounces last year. We see that moving back up towards 3.5 to 4 million ounces in 2015. Now, the question is, to what extent will that production rebound impinge on price rise that the producers really need to see over the next couple of years to keep their mines profitable?
Okay, and on automobile demand, how do you see that affecting the market for platinum, and what about palladium, since they're used in different catalysts, I understand?
Sure, that's right. So nowadays, palladium is not only used in the gasoline sector, which is particularly strong in North America and in the emerging markets, but it has also encroached on what has traditionally been considered platinum's market share in the diesel sector. So now you're seeing palladium substituted into a diesel autocatalyst at a ratio of probably 30%, give or take 70% still platinum. But the question is, to what extent can that encroachment continue if what we refer to as substitution? You also have ongoing thrifting, which is producers, the automakers and their coatings partners working to reduce the amount of precious metals that they put into each autocatalyst over time. As R&D improves, you can get the same effect out of less metal. So these are ongoing challenges facing the platinum market, which, particularly given it's a diesel metal and exposed quite extensively to the European economy, outlook is probably relatively neutral over the next year or so based on general views around the European economic outlook. I think for palladium we can be a lot more positive, because not only is it continuing to see this substitution effect, seeing more demand going into palladium from platinum, but it's also exposed to the gasoline markets, which are the emerging markets, and the US, which over the last couple of months has posted some really positive numbers in the automotive industry.
Okay, And finally, where do you see prices averaging in 2015, and which will perform better, platinum or palladium?
Sure. Well, I mean, going back to what we were talking about in terms of stock levels beginning to or continuing to converge over the next couple of years, including in 2015, we think that prices are likely to move towards one another a little bit more, as has been the case over the last couple of years. So we are currently forecasting a modest uptick in the platinum price to around $1,300, $1,350 per ounce, whereas for palladium we're a little bit more price positive, and we think that the average could be in the region of $900 an ounce.
Thanks for joining me, William.
Pleasure. Thanks, Teresa.
I'm Teresa Matic with Resource Investing News.